Sweet, cool. So, thought I'd just jump on here, do a quick Q&A with some of you guys. Questions. I say quick, probably not going to be quick. Having a look at the chart. So I've got 2 positions open today. I've got EA for the short, which I think is borderline about to be. Oh no, I've got a bit of protection on that, to be fair. I might survive the move. Who knows? It's looking pretty interesting still. So yeah, I can show you the position. I went with a quite additional. You can see the stop protection I went on it. Yeah, may survive this run. Obviously, still quite happy with the trade overall. If you look at it over here, I marked it up wrong when I put it on there, but you can see from positioning, once it loads, pretty decent positioning in terms of what's going on. So essentially trying to get in over here to then go short. So just giving it some space to breathe, because there's quite a big move there. So I'm not trying to be too aggressive. I want to play the bigger move, anticipating that we are going to sell. So just waiting on that one. Waiting for the 15-minute flag on EA to fully develop. Yeah, arguably you could say it's underdeveloped, but then also arguably because of the time of day it did shape up for the 2-touch. It was risky, but again, you know, I think if I pull that up here and I move this now and evolve it, this is what I did also see as well. And I think, you know, if that candle closes there, you could probably get involved. I'm still quite protected on this. My protection is actually a bit higher than this. If I go back and look at it here, yeah, my protection originally was 30 pips. I thought I went in with less, it's 30 pips. So yeah, pretty decent, pretty happy with that anyway. I always try going with the additional protection. I think at the end of the day, additional protection has really saved me a lot, kept me in a lot of trades and kept me out of a lot of bad trades. But also, I've made money in a situation where I would have lost money and then compromised my mindset, as well as having low risk. So trading with a low risk and also yeah, positioning myself in trades which gave me a higher risk reward. What's that? So 177,295. It depends what what broker you're looking at. If you're looking at FXCM, 177,295. It's my stop loss. So yeah, if you're looking at FXCM, you would have been taken out. Or by spread. I'm surprised you would have survived that. Yeah, pretty much borderline the same as mine. My stop loss is roughly around about. Are you going to report it? You're going to report it to the exchange, to the banks. It's 1.77368. But obviously with spread is roughly around about. Just have a look at this. I don't even have the spread on here, but it's borderline, quite tight. I think there's still a pretty good trade there. You know, I like this trade a lot, but what I like a lot more is my other trade, which is here. If I bring that up, looking at it right here. Boom. This is the trade. S&P 500 for the recovery to the top, 10%. Basically, the way I'm seeing it is, yeah, sure, it's selling here, but what we know about S&P 500 is it tends to recover quite well. So looking at it borderline, tapping into those retesting area, it's come down correctively. It's either going to develop some sort of flag here to continue lower, or we're going to reverse from here and go to the upside. In terms of positioning, I just genuinely thought it would be quite strategic to play it off the retest of that. So when I saw it here, I looked at it on the 4-hour, and then I could see that we kind of retraced on that section, which is a positive sign. Then I went down to the 1-hour and I was like, okay, great. What do we have? Well, above the retest, we started consolidating. So then I was like, all right, let me see if I can get involved in that 15-minute. How's that looking? Well, we started squeezing, we came back down, we left the gaps, and then we kind of filled it with a bit of a wick there. I wasn't entirely totally convinced with that wick fill, but when I was looking at it on the 15, in the moment, I could see that we had information sort of in that area, and I wanted to get protected below that point, just in case we did kind of a little bit further, then at least I could kind of see that in place. Obviously, with price correcting a little bit further, it's giving me signs that this could potentially squeeze into shin. So I'm kind of being a little bit cautious with that. But I'm happy to leave the trade open. But at the end of the day, this is a trade that I think has, especially when you line it up with some of the other indices as well. So that's basically my thought process on this particular one, where zoomed in at this point, which is completely fine. You can kind of see the makeup of it when you see the low, the gap, the fill off the gap, kind of the squeeze to the upside, and then now we're just correctively moving, which isn't the sort of progressive price action that I'm looking for. So really and truly, if I wasn't trading low risk, I probably would have forced out a break even or reducing the size of my position at this point. So again, another benefit of trading with low risk is, and when I say low risk, I mean 0.25%, right? Is I don't really have to worry too much, because in terms of probabilistic trades that I'm taking, a lot of the time what we're seeing is, and I'm just going to pull up my trading journal, give me 1 second. You can see here, a lot of the time with these trades, they are working in your favor. I mean, okay, fine. Actually, funnily enough, looking at this, I just realized I haven't actually taken a loser this month yet. So the odds are kind of falling in the probability side that I could take a loser. So staying with 0.25% is also a good thing, because, a winning streak doesn't last forever. There's going to be times where you win, and then you will take a loss. So when you're constantly winning, understand that the probabilities of you potentially taking a loser is increasing now, because, you're still working with probabilities. You don't have a 100% strike rate strategy. So then the odds at this point is kind of more in the favor of don't over risk because you're up, because the odds are falling in the favor of a loser is coming. But if you start over risking, you're going to send yourself backwards. And that's something you have to realize with probabilities as well. Probabilities isn't just the probability of the trade, it's also the probability of you consistently winning. Like, you can get into a lot of winners and break evens, sure, but a loser will come at some point. And when the loser does come, make sure you're not over risking on that loser. That's a very good tip there. AC, let's have a look at AC. AC. But yeah, just in terms of where I'm at this month, actually, let's just double check that. I'm currently trading at 21.30% with my shadow trades added in, right? Shadow trade for me is basically, I'll mark up the trade exactly how I would take it in the live market, but for one particular reason, which might be I might not be able to manage it or be buying the charts, but I still want to take the trade and manage it and see if I can, then I will. And essentially, to me, that's still a trade, because I would have treated it exactly the same. The only difference is perhaps maybe you can't account for the spread entirely. So, if you're getting too tight with your stop loss and stuff, then, it's probably not going to be as accurate. But if you're trailing it from afar and, your average spread is like 5 or 10 pips, no, not 10 pips, 5 pips, 3 to 5 pips, then, if anywhere behind 10 pips you're trailing it, you're good. But yeah, so far, if I just kind of run this back, you can see it here. So this month I've had a few trades on there. So I've got 2 trades live at the moment, which is S&P 500 and Euro Aussie. S&P 500 for the long, Euro Aussie for the short currently. And then I've also got these little winners. So you can see how stacking the small wins work in your favor. There's 8 trades in total taken over the 5-day period. And there was 2 trades taken on the 3rd. No, 3 trades taken on the 3rd. 2 in London session, 1 in New York session, 3 trades taken on the 4th, and then 2 trades taken on the 5th. It does seem a bit like over trading, but again, they all meet my plan. I haven't deviated from my plan so far. One thing that I do take pride in and really focus on is trying to get 100% RCR rate, which is basically just making sure that I'm not taking anything invalid. I'm taking only trades that meet my trading criteria, my plan. I'm following. Yeah, sorry about that. Got disconnected for a second. Yeah, so just making sure I'm always constantly following my plan, and then by the end of the week I can review it. I can see all the trades I've taken and it meets the criteria. Let's have a look at AC now. Okay, Aussie CAD, I do see exactly what you're looking at on the 5 minute. Let me just zoom out. 15-minute looks good as well. Yeah, that's a decent trade, man. Really, it's coming from a area of interest as well. Strong push up. It's a big 4-hour candle, and the 4-hour that closed after it was a bit aggressive in the terms of a pin bar. Now, that's the tricky part to AC. AC can look great on the lower time frame, but on the 4-hour it does look a bit minimal. The 1 hour is showing promising price action and it is shaping up really well. So I wouldn't let that 4-hour candle put me off the trade entirely. I would just kind of class it as a bit more higher risk. But in terms of positioning and where it's going and where the flag is situated, all of that, added that into one confluence, I think there's more things to tell me that this is a good buy. Let me show you guys. Look at that trade there. Beautiful trade. Check that out. Beautiful, absolutely stunning. You know, this is what I mean by the 4-hour. So nice thing is 4 hours taps into this area here. It's responded here. Strong momentum there, which is great. And then if I just zoom in a bit more, you can see that strong momentum, but you can see that following 4-hour candle just there. That one right there. Not the best 4-hour candle, but you know, the next candle can change a lot anyway. So I would still go into the lower time frame now and still look at it from a 1-hour perspective, and then you can see the consolidation. So the store was deliberate enough. I look at it on the 15-minute, and then there is a confirmation right there where you could take it. Like I said, it's a bit more of a higher risk play because it's a big 4-hour candle, so it could retrace a majority of that candle. But I think this is still a trade worth paying attention to on the side that this plays. I wouldn't go aggressive like that. I wouldn't go with anything like that. I would probably still try sit with, if I measure 50% as well, give me a second. I just want to see where 50% sits on this candle. Yeah, if I look at it like that, to be honest, risk reward wise, yeah, I'm happy with that trade. I would probably still go to about 10. I'd go 10 on that from where it is right now. So I'll go 15-minute, take the trade for what it is. Click on this, delete that, take it here. If you took that trade, I don't think that's a bad trade at all. I think that's a really good spot. I think 100% I like that. I like the fact that you have this, you've got that internal part there, you've got this, you basically got your confirmation of the squeeze. That's, for me, that's in my plan as well. Like, I'm happy with that trade. So yeah, if you're taking that trade, man, I would back you 100%. I think that's a great trade. I just think that don't go for too much risk on it as well because of how big that is. It is showing good momentum, but it's one of those ones where it's just this at the moment where that can still develop. And the next thing you know, it turns into something larger. And then you're kind of like, even though that looks perfect, it developed into something even nicer. So it's a good trade. It's just right now it looks like a great trade. Could develop. I just think that I would take that 100%. I would take that. I'll take it. I'll go tight 10 pips. Gives you good coverage. It's a great trade. Thank you for sharing that, for sure. Hey man, can you share your go-to setup? I saw in your journal 1 and 2. Yeah, okay. So my go-to setup, it's a difficult one to share because it comes in many variations, but it's very simple when you understand the mechanical play of it, right? And it's the same go-to setup as many other traders as well. I'll show you that on here. So essentially, let's say, and remember this comes in many variations. I've explained it in previous videos, but again, it's something that you have to train your eye to see. So price would come down, leave some sort of gap. So this would be the area of interest where I'm looking at the continuation. Now, there's a lot of things that kind of matter on this, and it's like positioning, sequence, an entry, which is basic 101 Falcon. It's essentially, if I just kind of clear that off, it's essentially where it's come from, how far it's come in the run, how reliable the flag is here, and then the makeup of it, right? So here you can see, because we left a gap, that's one part to it, and then we filled it. And then the next part is, how did we break, or how did we meet with this section? And then the next part is the confirmation. And then the next part is, was there a middle section? Did there need to be a middle section? Then the next question is, was there a 3-touch within there as well? Do you see there's all these different little variational confluences that increase the quality of my go-to setup. So my go-to setup could come in a variation of higher risk, high, low risk, and low risk, depending on PSE. So at the end of the day, what I would want to be more conscious of when I am looking at trade setups is just really understanding your setup. That's the most important part. To be fair, like, you could trade bull flags, bear flags, and you can stick with those, and they still come in the same, pretty much the same variation of what I just spoke about, but you'd have to be able to see it in different ways. For example, let's just say, you know, that's your high, and that's your low, and that's the middle, and then you've got this flag here. Knowing that you're looking at flags here because you look at the middle of the run, you'd say risk entry would be here, reduce. Where would you set your criteria to basically have your order here and here? Let's say, obviously, this low was lower, right? So that was irrelevant, but it came up like this, and then came down. It came through the low and started creating the flag here, right? You've got two ways to take this. You can take it on the risk entry here, if it meets a set criteria, and then you can take it over there with the stop loss above, as long as you can manage it into the next point there. And then that would be your reduced risk entry, right? So knowing that and keeping that in mind, it's one of those things where you have to plan for it. So in this particular scenario, you didn't get your 3-touch, but you did get a 2-touch, 2-touch, 2 tops, 2 bottoms, and then it kind of just trickled off. If with your set criteria in place, you should have been able to reduce risk that, because you basically have seen this flag so many times. You've seen it not complete on the 3-touch. You knew what criteria were within it that could make the 2-touch a possibility. So you'd be able to take advantage of that. And then you'd be a master of continuations between, you know, range points like this, for example. And then you'd be waiting for this. Now, this would be your next point where price comes back down, does this, and then you'd take advantage of that either here, or if you've had 2 tops and 2 bottoms, you would have set your order there, risk below, and then you still play that up into the upside, into the next point. And then you would just repeat that over and over again. That would be your particular edge in the market. So that's just essentially how you can be consistent, really. If you find one particular thing and you can do it really well, you can just continuously do it. You know, I could probably build so many different strategies now, knowing what I know. Like, I could help somebody establish a little niche in the market of where they can constantly make money, which is an interesting skill to have. But again, I think where we are in Falcon, probably have the best skill possible, because we can kind of see everything we need to see. Let me just quickly check this. Yeah, this one's nice, man. I'm tempted. I'm not going to take it, but it looks great. It looks great for a trade, so that's why I like it. Let me see, Euro Aussie. Yeah, Euro Aussie is not, it's not looking good. Just got to give it time. Leave it on the 1 hour. Let it be. There was a good trade there that week, I would remember. That was nice. Let me go back into these questions. So, yeah, I am 40.25 risk. Yeah, great. I love that. I'm also looking for EJ, NJ longs, waiting for a third. Yeah, look, listen, with all that selling pressure on these yen pairs, a pullback is more prominent now than anything, because we've basically tapped into so many areas of interest. So if you're looking for a strategic long, I think you're good. You're good to do that, because I'm looking at quite a few pairs. It's included with the JP225, right? You can see, look how it's pulling back now. It's showing signs that people are buying this back up. If people are buying this, then that means there's a possibility if EJ and NJ and all of those are positioned well, you could take advantage of them. So just looking across the board, I don't think they're going to entirely come and scoop all the way back up. It's possible, but I think a pullback's possible as well. So with these ones, right now, they're situated quite quite in the middle of the center of the structure. I don't think this is looking like it's going to become a flag here. This is not going to respond there and just sell off. I think this is going to be continuation to move even further up, like you're looking at. So I definitely like that. I like your thought process on that. That's really good, Ankit. Aussie US dollar, same situation. It would be nicer if we cleared that high and we created something there, but it doesn't really matter because after that strong push away, it's one of those ones now where price is either going to probably just sell off again, right? Create continuation and sell off, or price is going to respond to the accumulation within this area and push up, and then you'll get more continuations on the way up, right? And you'll be able to play those. Right now, it is quite high risk to take something in there because you're trying to be strategic and smarter than the market, whereas the market is going to do whatever the market has to do. And right now, there's the possibility that even this could become head and shoulders on a lot of these pairs, right? There's a lot of variations of what could happen. If I flip it, it might be a little bit more cleaner. You can see this. I think a trade like that would be nice. I would be for something like this. If you've got the right confirmation in that area there, you take the trade there and you play it at least into that low there as a manageable point to break even. And then when it starts to follow through, you can catch in the next trades. Just keep going. And that's the sequence that you really want to be looking for. But right now it's too soon to tell. This can still develop, come back up, you know, starts messing about, and then it just continues, you know, just making its way higher. And then you're still part of this overall move upwards, downwards. It's flipped. So yeah, just bear that in mind. That was NJ, in case you didn't know. Are you going to play the piano? I already played this morning, actually. I usually play every morning before, or usually after I do my forecast, and then from around about after 9 a.m. I'll probably already look to get in the markets if I'm going to take anything, and I've kind of got a good idea of what I'm going to be doing London session. And then from about 10 to 11 I'll play a bit, and then I'll come back after I walk my dogs, and then from like 11:30 to around about 12:30 I'll usually play, or 12, and then I'll jump on one of these lives. But today I'm going to go do some shopping and stuff with my wife, grab some stuff because she wants to throw a party on Friday, or she is throwing a party on Friday, so I'm going to go grab some decorations and that, so I won't be able to monitor the charts as much today, which is fine. I'm not really bothered. I don't think there's a lot going on in the markets right now as well. I think a lot of the moves that I was really keen on have already played. I do like this one though. If we're looking at yen pairs for the buy, you know, the great thing about this is we filled that gap. So this was a very intentional sell. We came in, we filled the gap over here, we pushed up, and now we could be getting some sort of continuations to keep moving. Something like that would be solid. And we just keep moving. Oh shit, you can't even see my screen. Man, I'm drawing it on here. We filled this gap. This is JP225. You filled the gap here, came over there. You can see how we came in and filled it, pushed up, and now if we get continuation, we just continue moving to the upside. It's basically what I was saying. Are you? Why not? Yeah, I can break down those trades. Yeah, that might be some useful information for you guys. Let me go through all the trades from this month because there was quite a few now. I've got 2 run in as well, so let's start with NJ. NJ's over here. So NJ was a 4% trade for me. If I open it up here, what you can see over here, so this is the daily chart. You can see that the daily for here tapped into this area. So this is where the interest for me kind of came into play. I wanted to see it a bit closer. And then we can see it now on the 4 hour where we had the retrace, we had the momentum, we broke that low there, and then we started creating some level of continuation there. At that point there, that's when I was starting getting a little bit more interesting. During this consolidation, then coming into London session, I understood that, okay, NJ in comparison to a lot of other yen pairs are shaping up really well. Take your pick. I'd like to get involved in a couple of these because they're positioned really well, and the JP225 was selling off quite aggressively at the time. So I want to take advantage of it. What we had over there was we had a little bit of a pin bar on the value of area, and I wanted to get my stops above it. You can call that the most aggressive play or the most earliest play, but I was happy with that one entirely because, again, this is the 15-minute just for demonstration purposes. In the future, if I wanted to see some data, I'll put it in there, but it wasn't necessary. And then after it started playing out, this is basically the management. On the hourly, we dropped off. Arguably, there was another entry here on the evening star there, and then we dropped off. We pushed down, we consolidated here, and then we carried on going. Arguably, there was another trade in here as well, but irrelevant at this point. And then I managed it aggressively into, so this was the main target zone down here. But at this point here, I had to go out because it was my wife's birthday. So I was like, okay, you know what? It's either this area where I'm getting aggressive. At this point here, I started aggressively trailing. Fortunately, we just dropped off even more. And then as we tapped into those areas, I just got extra aggressive with it because after a push like that, a pullback is possible. Probably to come back, retest and stuff. I was just like, I don't really have time to move this all the way up here and then manage it more aggressively. So that was basically the trade on NJ. Would have placed my entry on EN if it was. Yeah. AU, I'll show you AU. AU was the same thing situation, pretty much. So this one was a 3.5% win as well. This is AU for the trade. Basically what we did is we tapped into the area up here on the 4 hour, you can see it. On the daily, you can see it clearer. You had a wick, sharp sell off. We tapped into it here, then we had a push away. Arguably, you know, you can say that with the momentum there, we had daily momentum into play as well. You can see it on the 4 hour, nice strong candles, failed to continue up further. We broke the low and started creating continuation, so I was interested in this area. We then came in, arguably we were for 3 touch into that. We had 2 bottoms, 2 tops, and I was very happy with this position. There was 2 ways I was looking at it. Either I take the stops here and put it here, or I put it above. I didn't mind where I put it because at the end of the day, I was really happy with this. On the 1 hour, it doesn't look like the cleanest entry, but if you look at it closer, you can then see, you know, the mechanics of this whole structure here and the makeup of it and how it got there. And then when I looked at it closer, I was like, you know what, I'm happy with that 1 hour close now. And then I took the 1 hour and I managed it aggressively into that low, roughly around about the start of where that gap opened. And at that point there, I was kind of more on the side of, I didn't want to be in the market for too long because again, it was my wife's birthday and I wanted to be a bit more aggressive with all my trades. So NJ and this one. Oh, sorry, this was the day before my wife's birthday, actually. But I think I had stuff I was doing and I wanted to be more aggressive at that point regardless. So I just started being aggressive in that area there because I understood it's either going to drop off aggressively and then I could take profit. So what I did was I set my take profit on that, just above that line there, but it didn't tag me in for the take profit. And then I was trailing my stop losses at the same time. So I knew I was going to secure profit anywhere between that range. And that's basically what I did during that period where I just became more aggressive in that area because I understood that, yeah, sure, I could probably definitely lock in around about 3 to 4.5% roughly. But more importantly, I'm stacking the wins. And then at that point, I knew I would walk away with somewhere between 8 to 10% on the day. I mean, I did walk away with 7.5 for those 2 trades that I just showed you. And then there was this one, which I didn't take this trade on live, but I did shadow it. So I saw the trade pop up. It was basically EA, sorry. Let me just quickly show you EA for 4.5%. This was on the YouTube live on the day as well. So basically we were looking at this structure here where it tapped into that low there. And then as it was coming in, it responded over here, had that mini double bottom, filled the gap. And then we had a pretty interesting little pin bar there. Not pin bar, sorry, indecision candle. And then we squeezed into it. And then after the squeeze, we had a little bit of a push up, which was a retrace, arguably at this point here, 50% retrace on the breaking candle. and then we had a little tight flag. Now I did say this was much higher risk because of where it was situated, but I said it's definitely a trade worth taking if you're in the position to, and then you can just manage it to the next point, but it could easily be a tag in, tag out. So I just wanted to put it onto shadow trade. I said, you know, depending on where I was situationally, I would have taken this trade. So had I been up in profit, I would have taken it. Had I been in considerable drawdown, I wouldn't have taken it. But again, it's also good to just understand it because it's still a part of my plan. This would be a part of my trade setup 1. So I was still very happy with doing that. If you flip the chart over as well, it just represents a very similar sort of trade idea. So yeah, very happy with that. Managed it aggressively into that area. Obviously the target zone was up here. That was the target zone, but I wanted to be more aggressive into that area at least. And then if it created more continuation, I would have then potentially looked to get scaling. Just given the time of day, I think it was getting into around about 7, 8 o'clock. And I didn't want to be holding through swaps, especially with a Euro Aussie pair, because it can get a bit wild sometimes. And I think there was some news coming out. Pretty sure there was some news coming out at some point after. So again, it was a pretty decent trade. If I zoom in now, you can see it here. Yeah, you can see it pretty close there on the 5. And yeah, the trade would have been played like that. I think the confirmation was there for me on the 15-minute, which is there. You can see that, you know, we started stalling, failing to break. And then as we started getting some momentum, started pushing up higher, I was like, you know what, I can take this trade. And then if it comes to the top of the pattern, I can move to break even. And then even at that point, I would have survived it. So still very, very good trade there in itself. Very easy to manage. Mechanics of it was all there. The next one that I had here was Euro Aussie. So this is on the 4th now, so this would have been yesterday. And yeah, essentially this one, I think a lot of people caught this trade as well. So Euro Aussie came on the 5-minute, basically had a consolidation sideways, gave a nice little retrace candle on the 5. You can see it on the 15-minute, a little bit closer there as well, where I took it a bit early, arguably, because it did still come back up. So there was 2 ways, actually. If I took it with a 12 pip stop loss, it would have been a loss. And I said this yesterday on the live. This would have been aggressive, but I always like to put a little bit extra. I think I've mentioned that in almost every call. If you put a little bit extra, these things add up. So 12 pips would have been a loss, 15 pips would have been a survival. 15 pips look like that, 12 pips look like this, not much difference, right? But this one's just covering the wick ever so slightly. This one is above the wick, right? So now if we look at the trade a little bit closer on the 15-minute, you can then see it here where you're basically just playing it as a short-term trade, but it could potentially move a lot further because it's in momentum. That's the whole trade idea there. So you're looking at it like this, where you're targeting that area there, but you also know that it could go further down. So keeping that in mind, how the momentum is, where it's positioned, and it's dropping off with, you can see how that momentum's kicking, which is the most important thing. Look how strong that bodied candle is. So position was taken and then it started dropping off. Now at this point here, I had Aussie yen, New Zealand yen, and I had Euro yen, right? So this one I ended up taking it out for roughly, if I just open it up again, well, it's right there. This one I ended up walking away with roughly 2.8%. So again, because I went with the additional stop loss, I survived it, but again, I took less on the profit. Over here, I took Euro yen, same trade thought, I process everything. So, you know, we tapped into high value area, we had momentum selling off. We then pushed down, and then as we had the tight consolidation, I was looking to then manage it into the lows and then potentially go further. You can see it closer here. That was basically a trade idea. This one was arguably a lot cleaner because we had the retest there that it basically did. We then had the override section here, which kind of aligned with the 1, 2, 3. It was sitting on that particular low, but when you really look at it, what is that low? It's not. Obviously, it is a point of sharp interest, and it can really turn around there. But there was a point just below it as well, and it was like the odds are when you've got points so close like this, it's most likely going to gravitate to this one because they're just so close within that correction. A lot of the liquidity is sitting within this area in total. So I was just going to see how I could manage that. Left it at break even, and then price just started to move around about this area here where it tapped into that low. I did start to consider locking in 1%, but then instead I just moved to break even. And then as it started breaking that low, I was then being a bit cautious with the little low just below it. But this was the real trade I was waiting for. I wanted to see it clear all of that and then give us continuation. Anyway, price dropped off, and then at that point I locked in around about 1%. And then I said I'll be a little bit more aggressive with the trade, which I think was extremely important. And then, yeah, ended up aggressively just getting out with 3.5%. And then I also had NJ on. Now, remember, they're all the same trade, so I'm managing them all the same way. And usually when I got out, it was pretty much a time where I was pretty much going to walk away from the charts as well. So I was quite happy with being aggressive because I knew I wouldn't be able to manage it for the whole day, even if it continued going. You can see there's a clear value area there that we're trading into. I got positioned there, and then I was trading into that point there. So that was basically the target zone of what I wanted to get into. And then if I get a bit closer, you can see the trade here. So that one was pretty clean as well. So there you have your 1, 2, 3, tapped in. I mitigated with the stop loss just above, because if it did push up to maybe just even tap into that for whatever reason, you know, then at least I got a bit of room to make a decision prior to it, or I kind of understand what could potentially be happening. With the other yen pairs all shaped up, I was very happy with that. And then in the moment, I took the trade, and then it dropped off. And then it was pretty easy management. I think where people would have gone wrong is if they stuck on the lower time frames. And if they stayed on the lower time frames, they would have probably lost their patience and got out and mismanaged this. But if you stayed on the 1 hour, for example, look how easy that management was. It came literally straight down to the point of interest where I was looking to get out, because it was a momentum play. I was looking to be aggressive. It did drop off for a lot more, I do know that, but at the end of the day, I still walked away with 9.3%. So I was very happy with my overall decision making on that. And yeah, so let's have a little look at my 2 trades that I have open now. Are they still running? Let's have a look. Okay, so it looks like we might be getting a positive response on EA right now. EA over here. Don't know if you heard that. It's always hearing fighter jets flying over. It was a pretty loud effect. Yeah, crazy. I don't know if you guys heard the fighter jet. Share that moment with you guys. There you go. Scoops, come inside. Yeah, I don't know if you guys could hear that one. Crazy. So, hey bro, one second, let me read this question. Says, are you going to play the piano? No, already. Would have placed the trade on the take a look at Aussie CAD longs. Yeah, I did actually look at Aussie CAD longs. Aussie CAD for the long looked good. It looked really good. I was saying it right here. 100%. I was fully for this trade. I genuinely like that trade a lot. Couldn't get in as already 2 positions open, partially missed. Nice long. Yeah, I mean, look, don't worry. I think it's one of those ones. It's not the best trade in the world. It could look really good, but it's not the best trade in the world. Like there is probabilities on the side that this could probably pull back a little bit lower as well, unfortunately, even though it looks great, because the thing about it is that the 4-hour candle is quite large, so it might retrace some of that candle. And keeping that in mind, we just want to be cautious when we are taking a trade in these conditions where price is already pushed with its impulsive leg. So now it's accumulating volume to make the next move. We have to ask ourselves, there is enough here to support the idea of a tight small flag, but given the weight of how the impulse went, is it going to accumulate more volume for it to move higher, and how is it going to do it? The odds are, I think the entry there is pretty good, even with a 10 pip stop loss, so I'm happy with that. I just think that you need to be a little bit more on the cautious side when you are taking a trade, just because, you know, these things can happen with the 4-hour candle. Could retrace a little bit more than you anticipate. But like saying that, 0.25% risk, I don't see why you couldn't take a trade like that. You know, I think, again, this is a good trade. This is a really good trade. Sorry about my dog. Yeah, Aussie CAD long's gonna get, it might come back down. You could set a, you could keep an eye on it. You could keep an eye on it and it might come back. It's a very small difference in price, so I wouldn't really be too bothered if price is where it is now or if it comes a bit lower, because you're playing a much bigger move. When you zoom out and look at it, you're playing a much bigger move. What we're looking at, let's say we go to the 4-hour and you look at it and where it's positioned, you're basically really taking the trade here to go up here somewhere. So even if you took it with a larger stop loss, your positioning could be really good and you could be playing a much bigger move. So I'm definitely for this trade because I like the risk reward and the room it has to move. In terms of like a phase 1, phase 2, phase 3, look, phase 1, it's completed now. This is a phase 2 where it looks like it's done enough, especially with that 4-hour candle, but it could mess about a little bit and then it goes. So really and truly, this is prime territory for a long. This is a really good pair to have on watch. I think, yeah, I didn't have it on watch this week. That's why I didn't see it, but it shaped up really well. I mean, yeah, the mechanics of that, even the 4-hour, you know, the 4-hour is not going to give you the best risk reward and it might take its time, but damn, that trade is good. Even if you took it right now, I mean, the problem is I personally feel like there's something off with this, but you know, if I took it like this with quite a large stop loss, and even though I managed it into here, I got about 5 to 1 with very decent protection, and this could really go quickly. You never know. If I go with a bit tighter, obviously I would like to put a bit extra, always do. I'll go 13 pips, you know, I'm still walking away with 6 something. If I took it on the candle, still, even with 10 pips, I would be walking around with 7.8. So yeah, definitely the risk entry is a lot nicer. You can set a pending order, so you can get tagged into that, so that if you missed it, if it comes back down, then you'd essentially get tagged in where you'd want to get tagged in. So you can see it 2 ways. I don't know if you guys could hear it when I was putting the camera outside. Did you guys hear the jets? There was like these, you get these super flying fighter jets, and I think they fly over Greece to go down to the Middle East, most likely from the USA. And yeah, they're just crazy. Like I really don't know what's going on that side of the world right now, but a lot of the stuff is passing through over Greece. So yeah, it's crazy. It's absolutely crazy, man. Really definitely feel it. Oh look, so we can even see it is coming back into that entry area. If you wanted to take it, you could. You know, I don't see anything really wrong with this trade. Just to kind of yeah, I'm pretty close to Cyprus. I'm not far from Cyprus actually. Let me show you the map where I am. I mean, if I'm in Greece, you know, nothing's really far if you're situated close. Let me just quickly pull up the chart. Where is my map? Here you go. This is where I am. Wait, this map is, I think everyone looks at it like that. Yep. So Cyprus is there. I'm here. So I'm kind of in the mainland. Obviously there's this thing where you've got North Greece, South Greece. Yeah, I'm probably North Greece. So I am North Greece right here. Just right by the sea. Yeah, possibly. I mean, I know there's a big army in Cyprus, and there's there's a lot of armies all over Greece as well, which is interesting. Obviously, Turkey and Greece, they have a bit of beef over their land, but I don't think there would be a war on the mainland. It would be more so, maybe about up here somewhere, there could be a little civil war happening up there. And then there could be on these islands, fighting over these islands. But more importantly, what's that red dot? It's like a little red dot on here. Oh, it's me. But yeah, over here's where the real situation's happening. So you're right, Cyprus. Oh yeah, I was thinking that was Cyprus. Yeah, no, Cyprus, I'm not really near it, to be honest. Cyprus is a long way away. However, you know, yeah, you're right, you know, that's definitely a solid base for UK and America and whatnot to then move in, because then they've got their little coup. Anyway, what is this? War tactics. Looking at war tactics, yes. The answer to your question is I don't live near Cyprus, but I am closer than most people. Let's have a little look at our trades. S&P 500 is still, oh, okay, S&P 500 is still coming back. It's coming back down now, which is interesting. Perhaps maybe this is going to be the final washout before the move higher. So that'll be an interesting one to see. And then Euro Aussie, yeah, Euro Aussie as well as stop following through. I would probably say I would take if the 1 hour closes. We have to wait on the 1 hour close. The 1 hour close is going to determine a lot for all of these pairs, Aussie CAD included. Aussie CAD, I think Aussie CAD's already set in stone, man. It's pretty decent. Was it DXY? DXY tapped into that area. Oh, isn't that interesting? So if the DXY has already tapped into this area now, we have a good play in hand. If this starts to sell and we get some level of continuation here, we could see some euro pairs move to the upside, which doesn't really do me much justice on my Euro Aussie trade, but we might see Euro US dollar. Let's see New Zealand US dollar. Yeah, there could be some turnaround coming at some point. Oh, that's cool. So I had this trade marked on as well. I was looking at this as a potential trade there. It didn't quite play out the way I wanted it to. I was looking at it coming up here and then potentially just pushing up and then selling. We didn't get it, and then we got this little consolidation down here where I was potentially looking at something in there, but it was too tight and too far in the run. I think right now with how the DXY is, maybe we get something like this, and then it starts pushing up, you get continuation, and you can get involved on something like that to go long. I think that'd be great. EN, yeah, I'm happy I didn't take that one. I know some people took this trade. I just didn't like it. I didn't like it for the simple fact of we had this low here. We've already tapped into it. It's broken it, but we didn't create a base at this point. We just kind of had that. It's there, but it's kind of like where it's sitting, I wasn't happy with it, so I left it, and I'm kind of happy I did. Coming back at EA now, kind of similar in a way, but we left a gap down here. I'm pretty sure that's probably going to move to the upside and be a loss. Happy to leave it though, because, you know, it is what it is. We just got to wait for that hourly close. Hopefully, we kind of just reject here from here now, but not. I don't really care. I don't really care, man. It's just, you know, it's a very small position. This one's taking me out as well, just about. So yeah, definitely wasn't. Oops. Let's have a little look. Yeah, let's come down. Not entirely bothered with these trades, you know. This is what I was saying about probabilities as well. You take a crazy winning streak, the losers will come at some point. Are we tapping into that little point now? We'll have to wait and see. Am I still in this trade? Let's have a little look. Yep, I've still got quite a bit of room actually to breathe. You know, I think arguably that's still a very key area. I think somebody mentioned it earlier, like a 3-touch, but I think I could probably get out with a smaller loss if I wanted to. It doesn't look like your typical rejection, but I was always for that as a possibility there. Looking at that as the head and shoulders sort of possibility, the squeeze into it, and then we just coincidentally reject in this area. So I'm happy to leave that trade open. I think we still have a lot of potential ahead of us, so I want to see that probably follow through. So good, happy with that trade. S&P I think just tagged out. Let me just double check it on here as well. Yeah, S&P just tagged out right there, which is fine. It was, again, it was a very strategic play. It was similar to the Aussie CAD one, because if you look at it here, big strong 4-hour candle, retraced, the 50% was down there. It's borderline at the 50% now. So as a H4 play, I'm not even bothered with that. I want to see how the 1 hour closes in about 30 seconds. The odds are I don't think that's going to retrace all the way back up there, but where it's sitting, that makes sense. I just need to journal that one quickly. So I'll just take a screenshot of this. Yeah, sweet, happy with that. Euro Aussie, now let's see how the 1 hour closed on Euro Aussie. Yeah, that's not looking like a positive sign in my opinion. That does not look like it's coming back down right now. It should, but it doesn't look like your typical structure. AJ. What about AJ Long's currently looking for a 15-minute risk entry? I do also have AJ on watch this week. Yeah, same situation I was just saying. I think you can avoid a loss on this as well. It's arguably tapped into the low here, but look at that push away. It's aggressive. It might even retrace like you would want to be cautious in the side of just measuring out 50% and then seeing that as the area. And even though if you get something like this, it could just develop, tap into the 50% and go. So be more on the cautious side if you're trying to get something tight in there. I think right now it's one of them ones where a lot of bigger players who've been selling, if they're getting out their position, they'll be doing it in these areas now. So that was the major profit taking. And then this is the repositioning. That repositioning could take some time. So during that time where it's doing it, it could maybe consolidate a bit more. And then when it's done that, it might be ready to go. It could even do it in a more steeper way, which I'm not a big fan for, but it could be doing something like this. And then just kind of go, and it looks very ugly. So yeah, be careful with a Aussie yen. I know you're looking at the 15-minute here. I think I would personally be waiting for something like that. You know, where you've got clear 1, 2, 3. There's enough accumulation of volume in this area to go longer. So be careful with the AJ long. Doesn't mean it's not going to go, it just means that you could take unnecessary loss. And if you don't want to take unnecessary loss, I would definitely wait a bit longer. But the market is making a series of lower lows and higher highs. Why on earth would someone want to sell it? Super downtrend. I think we're talking about, which pair were you referring to? Is it this one? Maybe I should have priced that in, come with a little bit larger, but nah, I'll wait for that. Wouldn't be surprised though. It's, you know, this is borderline the area where it would pull back to, so it could potentially just come back up and make its way and continue. So we'll keep an eye on that for some sort of continuation to continue higher. Not a massive fan right now anymore. I do think that's pretty interesting, but it's been taken out anyway, so I'm not looking to get reinvested in this. Something to definitely add into my lessons though, I didn't price in the 50% off that leg. So I need to next time make sure I do that properly, because I could have mitigated risk down here. So if that retraces and goes, that would definitely be a major lesson for me to just put into my risk mitigation. What else have we got on here? Yeah, EA, I'm pretty sure, oh no, I've got much larger stop loss than what's on here. Pretty sure I got in a bit higher up, and it was about 30 pips. I think it was roughly around about here. So my stop loss protection is there. If I double check it now, yeah, borderline is the same, it's just there. Still pretty happy though. Even with those two losses, still going to be at, if we look at it, still roughly around about 18.3% up for the month, which is crazy. So not really phased with the S&P and the Euro Aussie messing about. Even if it's a loss, it doesn't really matter. Like, you can see how probabilities are really work in your favor. Like, the average winner I've had this month is around about 3%. And you can see it right here. That's the average winner. So, you know, two losses doesn't even cancel out one of my wins. Beautiful, absolutely beautiful. UJ. let's have a little look. Currency, UJ. It's big, but I like it. You know why? Because the DXY is also positioned in an area where we could see something turn around. I just don't want to say that. Oh, I'd like to keep turning my piano on. Let's see. Come in here. We had a continuation, failed continuation. We're still above this high though, so this can still develop into something larger. I'm not a big enough fan to say I love this trade, but I do like the fact that we're trading below all of that, and now we're creating something separate in here. And then if I isolate the correction into a correction, we're at the point where if I go to the 1 hour, it's starting to look good. The middle, there isn't really a middle section to this though as well, so it's kind of like a V shape after a large correction, so I'm not a fan of that as well. I think I wouldn't take this. Yeah, I definitely wouldn't want to take this because of many factors. But where I would look to take it is, I mean, I wouldn't take it on the risk entry, but I would take it if it just broke this low and gave me continuation here. And then the DXY shaped up with it, and I can manage it into that area there. And then if we look left, you know, you've basically got this area down here. Oops, definitely wasn't a straight line. You got that area there to manage it into. So then I'll be looking at a trade from the insurance entry, because it's a little bit more confirmed, the insurance entry. I'll take that with, let's say, 15, borderline 15 pips. And to the low, I've got about 2.5, and then to here, I've got about 7.5. And then that would be basically the whole trade idea that I'm looking at. So yeah, definitely, Zeph. I mean, look, you're trading quite a large amount of capital now. A little bit jealous, really. It's nice. No, congratulations, man. It's a big achievement when you pass funding assessment and stuff. It's a massively nice thing to do. Just stay composed and take it slow. 0.25% risk. Build up that capital. Start buying some nice things as well with your gains. Like, enjoy it a bit, but more importantly, take it slow. Don't take your foot off the gas, but take it slow in the sense of 0.25% risk and just enjoy the process now. Like, you've done the hard work, you've passed your assessment, you've got to the point of having, you know, how much capital you've got, and you know, it's a nice thing to be. I think a lot of the time, a lot of us, we get to those points and then we mess it up because we're too excited. So don't let that kind of stop you from being your best version, man. I genuinely believe that everything you did was intentional, even though, you know, you attributed some of the success to other people. I genuinely think it was all you, man. You're the one that listened, you're the one that applied it, and you're the one that took action. You're the one that took the risks. You're the one that managed the risk properly. Even though sometimes you might have done some things that kind of felt in the moment that you didn't entirely believe was the right way to do it, in the end, you got the result that you were looking for. So you still have a lot of time to now make sure that, you know, you continue doing what you were doing and you keep moving forward. You know, I've seen a lot of people move easily from nothing to having over 300-400K. So if they can do it, you can do it. And you know your stuff, man. You don't look at crappy charts. You don't kind of know what you're not looking at. Like, if I showed you a trade, straight away you know how you're taking this trade. You know, there's no two ways about it. If that trade shaped up and it came to the top there, you know how you're taking it. You know how you're mitigating the risk. All of those things. It's those factors that make you as good as you are. AC going down. Yeah, maybe the 50% rule we were talking about. It's very possible. It's not so problematic, man. That's kind of expected with those wicks. You know, for it to kind of just push into that area. You're kind of well protected down here. You'd be waiting now for your 15-minute close. So if that 15-minute closes with a wick, it's probably then done the washout to that little section right here. Let's wash that bit out. So don't get fearful in this point here. If you're in the trade, you're in the trade. You're riding the wave now. You know, it's like you don't get all the way to the top of the roller coaster and then decide last minute you're not going on it. Like, why did you wait for, you know, 40 minutes in the queue to decide you're not going to take the roller coaster? So yeah, let's wait and see that one. Obviously, I'm not, like I said, 50% of this could get retraced, this 4-hour candle. But in terms of an isolated sort of insurance entry, as long as you're kind of protected below that section there, not that it's a major point or anything, just as a risk mitigation, I think you're good. So you've basically got that as your low, you've tapped into it here, you've now come in, you're now breaking that as a final one. If you draw it on, you've kind of got this as well, and then you're now in the prime time area where price is getting washed out. And then if the 15-minute closes and starts making its way back up, you've got positioned really well. So that sell-off is unfortunate. Same thing happened to me on the S&P 500 today. But I would have bought it back up on the 50% really and truly. It's just I'm not looking to chase this trade. I'm done. Like, it's okay. But yeah, the 50%, you can see that it's tapped into it. It's done what it needs to do. EA, I think I'm still in EA. I'm still alive. Yeah, just about survived it. But anyway, I'm almost certain EA is probably going to mess about. So for me, that one is done as well. I'll probably come back and check it later. Calls it a loss. Doesn't matter, these things happen. But yeah, let's go back and check your AC trade. Oh, what about UK oil? How did that shape up? Nice. More jet planes, more jet planes. Oh shit, there was no sound, my bad, my bad. But yeah, higher risk, no, not a bad trade at all. It's just that 4 hour candle was the only negative confluence in the whole picture. Now that it's there though, look, the 15 minutes closed, you're looking for that 15-minute retracing just to go up. It's basically done what it needs to do. Like that's the completion of the structure now at that point in theory. So we either just go from here or we're wrong and it comes down. And that's literally it. So there's nothing really holding this trade back from going to the upside at this point. It's washed people out. It's done what it needs to do. The protection is there. You could take this trade now if you haven't taken it and you're thinking about it. Now's probably the best time. But if it retraces on the 15, that's an even better time. You've got more confirmed candle. Swiss needs time to develop, but it'll come. The ones that I took, EA, I think EA's done, man. EA's, unfortunately, it's just one of them trades that just didn't play, so it is what it is. You're a CAD. It's still coming up to that area, nothing there. EG, I was looking for continuation to downside, nothing. EN is longer. EJ, it was great from there. EJ is looking like it's going to go long, so if you're looking at longs, it does look interesting. Could sell off, go long, and then sell off again. It's underdeveloped in my opinion. I won't look to take anything on a lot of these pairs. EU in line with the DXY. I think a lot of our focus needs to be on DXY now. And let's just be patient and wait for this. This is where the real money is going to be made. Look at DXY positioning. Right, you even got this straight into this area. This corrective channel has now tapped into these areas. You've got that little bit just above. Just pay attention to this. Wait, even if it takes like 3-4 days into next week, this is where a lot of things are going to change and be good. You can see sequence. This is a corrective sequence. It's an impulsive sequence. We could be moving into an impulsive cycle here. Look at these big strong moves we've had, right? This is what we could potentially be seeing in these areas if this follows through. If not, then we could see more continuation to the upside. Great. Could be a bit more aggressive because there's less to the left now. We've gone through all of the noise. We've dealt with it. But more importantly, if we get that sell, be ready. So start, if you haven't already, I would say maybe just start preparing yourself for a impulsive phase, or prepare yourself for a continuation phase like that, where price drops off, and then just see how long you usually have to wait for structures to develop and stuff, and how you can take advantage of those moves. Prepare yourself for this if it sells, so that when it does happen, you're not going to be surprised by anything and you're going to be ready and sharp, and there's going to be less likelihood for FOMO and so forth. Yeah, extra protection, good. I think I'm keen to see how your Aussie CAD trade plays out, because I really did like that trade. I still do, even though it's done what it's done. I can see it being a pretty decent trade. I would stay on the 5 though, not for management, but just to see if we get a tight flag in here somewhere, then that's probably a clue that this is going to sell off, and then you could probably look to make a decision if you want to flip the other way. You went with the extra protection, good. EG, I had EG. Yeah, EG is, it's unfortunate, man. It was looking good on the shorts. It was looking good. That candle there was the clue. Non-progressive consolidation. It failed to create continuation and it just retraced back up. Odds are this is larger correction territory and it's going to be moving even higher. And then you can zoom out and then you can see that there is a value area above. And then when you see it here, it's just going to continue making its way up. Strong candles. We could see a retrace at some point, but the odds are this is looking very bullish at the moment. So yeah, it's good. It's good for the bull. EN, yeah. Do you know what? It's funny. I wouldn't have really wanted to take EN or EA that much, but I think because I jumped on the live today and it was painted really well and the confluences were basically presented to me, it kind of built more of a interest in the trade. So it wasn't something that I think I would have genuinely wanted to take anyway, really and truly. It met my trading plan though, which is most important. It's just This is how I took it. I'm still in the trade, weirdly enough. I've survived. I'm a survivor. I'm literally survived this run, this pullback, because the market loves me. The market wants me to win. So we'll wait and see. Imagine it drops off from here and I survive all of that and then it just goes. What a win would that be, honestly. GC, let's have a little look at GC. I am running low on battery, so this will probably be the last couple pairs. If you guys request them now, I can have a look at them. GC, nah, it's too steep, man. This feels a bit like a trick. Look at that. Sold off aggressively, scooped up, hasn't really tapped into anything significant, retested nothing significant, it's just there. So this can just really mess about and really take all your money. In the moment, I suppose if you zoomed in, you'd find something and you'd be like, oh yeah, we tapped into this. What about here if we come lower? Yeah, but there's no bases, there's no real top. This can just develop into a large amount of different things. You know, I could sit here for the next hour just forecasting different things it could develop into, and then categorize them into what's probable and what's least probable and then what's possible. And I think for that reason, it's just like, stay away from GC. It's not worth it. Even if I look at it on the daily, you could maybe get away with a daily play. No, you couldn't. You really couldn't. I mean, look, you've tapped into that, sure. If you wanted to play the long, I get it. But right now it's consolidating through the low. So the probability is this might come back up to the top of this and then sell off. So if you're looking at a GC trade, you'd ideally want to be waiting for it to come back to these areas to potentially evaluate it for the short and then basically read the price action on the inside. And then when you've got structure in there, something you can work with, it's something that you can play. But right now, it's not really the one, you know. If you had something like that, it came up, pushed back in, insurance entry, and it went, you know, I don't blame you on a trade like this where you took the trade here and then you had your kind of override, tapped into a bit of liquidity there. This was your structure. You mitigated with an insurance entry because there was a lack of a middle section and a solid high. And then basically you had the insurance entry and you could play that. And then you could get the scale in on the hover and then keep playing it to the downside. And then if we look at it over here, you know, you're looking at a risk reward sort of ratio around about, well, it is GC, so yeah, I'll probably go around about 20 pips on this. To the low of the structure, you're looking at 5-1 and a 10-1 to the low there with the first position and not the scaling included. With the scaling included, might be 15% So you can turn a crappy trade into a good trade, but you see how far off a forecast that I've got here. That's one of the reasons why I wouldn't even bother with it right now, because my forecast would have to take another week to then get here, and then this is Monday next week. So right now, a lot can change between now and then, so it's just something that I wouldn't even pay attention to. Yeah, GU. Oh man, what's going on here? GU is looking good. AU is the only one that I've got. Anyway, guys, I'm gonna head off because I've got some stuff to do. We'll see. If EA drops off, then I'll buy the next person that comments a Lambo. No, I'm just kidding. I'm not gonna buy anyone a Lambo. How cool. Yeah, oh shit, yeah, we need to have our call, man. Definitely. 2 o'clock, 3 o'clock, 4 o'clock. Maybe this afternoon. So message me on Instagram and message me on Instagram and we can organize a time and we'll jump on later if you're free today. If not today, then tomorrow could be good as well. Tomorrow we can do tomorrow. Sweet. All right, guys. So yeah, pray for the short to survive this, and we'll see how things go. Take care, guys. I'll catch you guys in the next one. See you later.